Hi everyone and welcome to my morning report on Friday the 8th of August with me, Richard Perry, market analyst at Handtech Markets. The European markets have again opened sharply lower, and there's a whole raft of reasons why, but certainly overnight the big shift has been on the back of President Obama announcing airstrikes in northern Iraq in an attempt to hold back the ISIS movement from pushing on to the Kurds in the mountains, and certainly that has the potential or certainly the market is perceiving that to have the potential to escalate, and the US involvement just opens a whole new angle of possibilities there. Certainly, for example, the oil price is quite a long way higher today, making gains, and safe haven assets pretty much across the board are benefiting. Gold price sharply higher, currencies such as the yen and the Swiss franc also benefiting as well today. So we're seeing a big move back into safe haven assets at the moment. These equity markets are sharply lower. The FTSE's a percent lower, and also the DAX continues to badly underperform. FTSE 1.4% lower on the DAX at the moment. So what we're seeing is a big move into or away from anything risk orientated today. This has certainly been shown in the DAX. The dollar index in the last few days. Dollar index, although, has been just slightly down today, and that's because the euro is actually benefiting today. The euro has come and seen a bit of a bounce, and I think that has been due to the fact that we've actually had some rather positive data out of France for a change. France has tended to be a very much of a drag on the euro lower in terms of economic data, but certainly today the industrial production in France came out positively, and that has benefited the euro in the past half an hour or half sorry in the last hour or so. Euros has been quite strongly higher actually against the dollar. In terms of volatility, in terms of equity volatility anyway, the VIX is still trading around that 16 to 17 mark. But if the markets continue to show significant downside potential, I think that there could be a sharp move higher once again in the VIX today. So what I'm still looking out for, obviously the initial resistance comes in around that 17 mark, but then you could well be back to that March high in the VIX. Interestingly, I say the March high because the equity markets in Europe, certainly the DAX, is not a million miles away. In fact, it's very close now to its testing of its key March low, which is 8913. So you watch out for that. That is a huge number technically, 8913. So we'll see how that goes at the moment. But certainly these equity markets remain under pressure today. The economic data we got out this morning, UK trade balance at 930, forecast to slightly improve actually to 8.9 billion, but not markedly. That improvement from negative 9.2 billion. And also into the afternoon, you've just got the Canadian unemployment at 130, just forecast to remain flat at 7.1%. I'm going to look at my chart of the day now, which is the Aussie dollar. And the Aussie dollar has just it fell away sharply on that unemployment data that we had yesterday. That was disappointing to say the least, and there was a sharp move to the downside. But on the daily chart, you'll see now that you're not far away from this key support that comes in at 9200. And that 92 big figure level is the bottom of a big range that we've had in the Aussie dollar over the past 3-4 months. Now, when you play trading ranges on technicals, the RSI starts to be a very interesting indicator, and that has tended to be a very good indicator when the Aussie dollar comes back towards the mid 30s, and then you basically trade it up towards the high of around the mid 60s. So you sort of get that middle of the road RSI reading when you see a ranging phase in markets, and that's what we're seeing on the Aussie dollar at the moment, and you're not too far away from that 92 big figure level. So if that support begins to hold, I think you could find that this may well be a nice little trading opportunity in this Aussie dollar to continue to play the range, and and for the Aussie dollar to move back higher again. In terms of the technical indicators, they're all fairly, in terms of the certainly the momentum indicators, they're fairly okay-ish. I mean, as I said, you're still being able to play the range because the RSI remains around that mid-30s point. The MACD lines are not horrendous in terms of just drifting back lower. Stochastics are fairly, well, they're sort of still in a bearish configuration slightly, but not sharply bearish, and that's because we're still trading within this range and it's not too bearish within the range. On the intraday chart, as I said, you've had this big sharp decline lower, so you'd start to think about the fact that we've got the trading range that comes in. So I'll just reset my chart. Thank you. Trading range that comes in around that 92.80 mark, which the bottom of that support area became the resistance yesterday. So you'll see that that's a bit of a pivot level. Old support turns into new resistance. So that could well be a signal. If you start to break back above that 92.80 mark, then that could signal the beginning of a technical rally. So it'll be interesting to see what happens there. But certainly, as I said, anything back towards that 92 big figure mark on the daily chart, if you start to see support forming, you could well find that that is used as an opportunity to continue to play this range and to buy back towards certainly the middle, if not back towards the resistance mark initially at 93.73. Okay, well, I wish you good luck in your trading on the Aussie dollar today. Sharp moves lower in the markets and bearish intent certainly on these equity markets and currencies to a certain extent as well. So we'll see how this one plays out today, but certainly at the moment it's could be another rather volatile day. Anyway, I wish you good luck in your trading and I will speak to you later. Thank you.